Hello everyone, I'm Anna and we are Dania Accounting. Today we are diving into a hot topic for international businesses with interests in Denmark. How can a non-resident company pay a salary to an employee in Denmark in 2024? This is crucial for those looking to expand their operations without the hassle of establishing a local entity. We will explore the nuances of Danish tax law, employer obligations, and practical steps to ensure compliance. Whether you're assessing tax residency, considering voluntary registration, or navigating the ATP pension scheme, we have got you covered. Let's unravel the complexities together. Sometimes a non-resident company wants to hire a single employee in Denmark. Due to shallow scale of activities, it is often not feasible to incorporate a new residence company or to create a branch office in Denmark. How you should approach this situation mainly depends on whether the non-residence company becomes a tax residence of Denmark due to hiring the new employee, and as a result, must pay company income tax in Denmark or not. If the new employee you want to hire will work in sales, your not-residence company will most likely have to register as a tax resident of Denmark. As a tax resident of Denmark, your company must allocate parts of the non-resident company's profit as taxable income in Denmark. It is a direct result of hiring a new employee in Denmark. This is because hiring an employee in Denmark can be considered as getting a permanent establishment in Denmark. Suppose that there are doubts regarding whether the non-residence company becomes a tax residence of Denmark. In that case, we recommended applying for a binding ruling from the Danish tax office. If the new employee works as a programmer, your non-resident company will probably not be considered a tax resident of Denmark. We always recommend checking with the Danish tax agency to see if your company has become a tax residence based on the planned scope of working relating to employing the new employee. If your non-resident company is considered a tax resident of Denmark, you must register the non-resident company as a typical employer in Denmark. Once the company is registered as an employer, we can set up a standard payroll system and provide a monthly payslip for the employee. For smaller companies and smaller payroll setups, we recommend using the loan as a payroll system. Even though your non-resident company doesn't have a separate entity in Denmark, the payroll process will be the same as of the resident company. The employee will receive a payslip, which provides details about the salary. The salary is called A-income in Denmark. The company will be required to withhold income tax and pay the income tax to the tax office. The withholding taxes that an employee pays in Denmark are called the A-tax and AM contribution and are paid to the Danish tax agency monthly by the employer. Registration as an employer in Denmark includes obligations to report and pay A-tax, AM contribution, ATP, a mandatory pension, holiday allowance, and other social costs. If your non-resident company is not considered a tax resident of Denmark, you can voluntarily register as an employer in Denmark anyway. Depending on whether you will have an address for the company in Denmark, there are two solutions. Should you get an address for the non-resident company in Denmark, we will register the company using the address. If you don't want an address for the company in Denmark, the company must have an agent in Denmark. The agent can be the employee. In that case, the agent in Denmark is generally not liable for taxes on behalf of the non-resident company, but serves as a point of contact for the tax office and the business authority. Suppose the non-resident company of its owner are located outside the European Union, in a country that doesn't have a similar agreements with Denmark as we have with the European Union concerning assistance in tax matters. In that case, the agent will sometimes become jointly liable with the non-resident company for taxes in Denmark on behalf of the non-resident company. So, this potential tax liability issue should be clarified with the employee before becoming an agent. If your not resident company will not be considered a tax resident of Denmark, and if you don't want a voluntary registration as an employee, you have two options. Option 1. The company can decide to register for both B income and ATP. When the company is not registered as an employer, it can transfer a gross amount to the employee as a salary. The obligation to pay the tax is then transferred to the employee. In this case, we call the income for B income. The employee must then register to pay B tax and AM contribution for his/hers self-assessment for the year. An estimated tax is then paid in 10 installments distributed over 10 months of the calendar year, excluding June and December. We generally call this estimated tax B tax, but it includes both B tax and AM contribution, a fixed 8% tax. When the non-resident company registers to pay B income, it submits monthly income declarations to the tax office. This method is often preferred since it is considered more convenient for the employee. The employee only needs to settle the B tax and AM contribution each month. Option 2. The company can decide to register only for ATP. This version is effortless for non-resident companies, but gives employees more work. When the non-resident company decides only to register for ATP, a mandatory pension in Denmark, the employee must declare the B income. The employee also pays the B tax and AM contribution during the year. ATP is a mandatory pension that most employers also need to pay. Included in the registration for ATP comes a variety of smaller contributions, which are collected as a lump sum payment. Also, you should remember the APV. An APV evaluates the working environment and assesses the risk of the employee. It is mandatory to have an APV in Denmark also when there is only one employee. Employers in Denmark must also have insurance for their employees. The insurance should cover both accidents and illness that can be caused by the work performed. That was a lot of rules and information, and it might be tempting to ask, can't you just hire the employee as a sole proprietor instead? The Danish tax agency generally classifies income from work as either income from employment, freelancing, or sole proprietorship. The tax is handled differently for these three classifications. Whether you can hire the employees as a sole proprietor, it will depend on factual circumstances surrounding the agreement and how the work is performed, if the person will actually be considered as the sole proprietor. If you intended to hire more people over time, it often makes sense to incorporate a limited liability company in Denmark. And that wraps up our guide on how a non-resident company can navigate the intricacies of paying salaries in Denmark. For understanding your tax residency status to comply with local employment laws, we have covered the essentials to ensure your business can expand smoothly in Danish territory. Remember, while the journey may seem daunting, proper preparation and knowledge are key to successful international business operations. Thank you for joining me on this informative adventure. My name is Anna. We are Dania Accounting.